What's up everyone, it's Scotty with MoneyVest. So in this video, I wanted to go over one stock that I strongly do believe that has a ton of potential long term, and I really would hate for you to sleep on this company. I'm going to show you exact data using our MoneyVest platform, and you can make a case for why this stock may not be the future for a CRM system for healthcare and biotech. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below. The first week of the month is the best time to join. We'd love to have you on board and of course join our MoneyVest community where you can access this entire platform once it's available upon launch. And again, you're getting early access. You can provide us feedback, report bugs, suggest features, suggest more and more ideas so that we can continue to build this platform into something that is super functional and useful for investors. You can do your own analysis on over 17,000 stocks, and we'd love to have you on board. 51% off right now, and you can lock this pricing in forever until you cancel, of course. So link's going to be down below. We'd love to have you on board. Again, if you have any questions, please feel free to reach out. The company that we're talking about today is Veeva Systems. I've done a video on this before, but I really want to help you better understand how incredible this business is. So really, for those of you who don't know, it's essentially a CRM platform that has a partnership with Salesforce, but it's mostly towards the healthcare and pharmaceutical industry. So provisions of industry cloud solutions for the global life sciences industry. The company is headquartered in California, currently employs over 6,700 people. And the company went IPO in 2013. And the firm's offerings span cloud software, data, business consulting, and are designed to meet the needs of its customers and their most strategic business functions from R&D to commercialization. The firm's industry cloud solutions for life sciences industry are grouped into two major families, Veeva Development and Cloud and Veeva Commercial Cloud. Veeva Development Cloud includes application suites of clinical, regulatory, and safety functions. So again, it's a very nice customer relationship management platform. One of my friends uses this because he belongs to the healthcare pharmaceutical industry, and he was actually going on his iPad and going through the CRM platform for Veeva Systems and told me that, most companies in this industry, in this space, use Veeva's platform. And I believe they have Veeva CRM. So you can see the, Salesforce, they had a partnership with Salesforce, which I think is coming to an end. And they're actually actively moving people out of Salesforce over to their own platform that they've built in the last couple of years as well. So the reason why this company kind of stands out a little bit is because of the fact that it's selling off. I mean, it is down. So if I bring up over the chart, it is down at trading as low as $183 from its all-time highs of $342. It is still down over 46%. So if you quickly go over to the fundamentals for the company, and that's the beauty of this platform, is that you can actually toggle between different years. If you go over to 10-year worth of analysis, you'll notice nothing but amazing, consistent growth for the business. For example, revenues have gone from $312 million to well over $2.3 billion. Gross profit has gone from $197 million to well over $1.7 billion. And for example, operating income, net income have also gone from about 70 and 40 million to now sitting well over 429 and 525 million. So they've basically 10x'd and more than 10x'd in some categories over the last 10 years for the entire business. And if you're simply looking at free cash flows alone, if I remove for profitability, just take a look at that. Operating cash flow and free cash flow has gone from about 67 to 40 million respectively to now sitting well over 911 to as much as $885 million for both operating and free cash flow. If you take a look at the margins right now, so everything has expanded except for operating margins, which is slightly worsened over the months. And again, if I plot for these numbers, gross margins, operating margins, net margins, and also free cash flow margins over a 10-year period, this right here is where we are. With overall growth here across the board, with operating margins, the only thing that's come down from 22% to as low as about 18% over a 10-year period. But again, if you take a look at free cash flow and net income, I believe, or net margins, they have increased from about 12.9, 13% to now sitting well over 22 to as much as 37%. Free cash flow margins really have crushed it in that 10-year period. And gross margins have gone from 63% to now sitting well over 71% for the business as well. Now, if this wasn't good enough, efficiency-wise also, they are pretty solid. However, one thing I would like to point out, and that's exactly why we've built this, is because it quickly analyzes every company on the metrics that we have pre-programmed. Stock-based compensation as a percentage of operating cash flow and free cash flow is high. On average, it's over 30%, and recently it's actually increased quite a bit. I mean, especially in 2024 and 2023, it's gone from an average of about 30%. Some years it's closer to 30, some years it's a little bit higher than 30, but last couple of years it's gone up to as much as 45 to 46%. Maybe that's one of the reasons why the company is struggling a little bit from a stock price standpoint, because there's been a lot of pressure over the last couple of years as stock-based compensation has increased as a percentage of free cash flow and operating cash flow. Revenue, it's still in the 10 to 12% range, 16% over the last couple of years, and that has also increased, as you can see, that it has also gone from about 12.6%. Prior years, it was much, much lower. So even though revenue has increased, stock-based compensation as a percentage has also increased. What we would like to see is revenue increase, but that percentage amount stay the same, right? So if it's stable or if it's actually coming down, that's even better. That means revenue is growing at a much faster rate than SBC. But if they're both growing at the same time, that means stock-based compensation is also increasing. And percentage of revenue is also increasing as well. So that's 16% now as of the last couple of years. So that is the only thing that I would like to highlight here. When it comes to the balance sheet, the company's got an excellent balance sheet. Cash is improving at over 30%. Debt, there is no debt. So negative net debt of about $1.5 billion. You can see the cash has continued to increase, and the company's continued to increase the net debt as well. So that is, again, solid. We're sitting on over $4 billion as of 2024. In net debt. Current ratio is over 3. That's good. Debt to free cash flow, pretty much non-existent. The company's got more assets than total debt and total liabilities. So a lot of the things, and goodwill is also a very, very low percentage of total assets. That's another thing that I wanted to implement on this platform, is to better understand what is the intangibles and the goodwill for any company as a percentage of total assets. Now, finally, if you come over to the valuation, we are still, I would say, trading at a little bit more on the expensive side, but we're going to take a look at the intrinsic value, and we're going to figure out what the calculation pretty much gets us to. What's the fair value of this stock? But right now, 2024, 56 times earnings, price to sales a little bit over 12.5. Compared to the average, of course, it is much, much lower. So if you come over to the fundamentals, and this is going to be the last 16 quarters worth of analysis for revenue, gross profit. If you come over to operating income, and of course net income as well, again, you can start to see very nice consistency for the company. If year over year wasn't good enough, this is quarter over quarter. The company's done incredibly well in growing their revenue, profitability, net income, operating income, all that good stuff. And finally, if you plot for free cash flows as well, so let's just plot for free cash flows over here. That's going to be in purple. It's been a little bit more inconsistent, as the fourth quarter seems to be the highest quarterly, or actually the April quarter for most years. Yep, so April quarter tends to be the highest number in terms of free cash flow, and it kind of tapers off. But all in all, pretty nice, consistent quarter over quarter growth for the company here. That's coming in. So if you remove for all of this, and then finally come over to balance sheet just to verify some of the numbers. So total cash, we are sitting on well over 4.7 billion as of the most recent quarter. Coming down a little bit further, we don't have any long-term investments for Viva Systems to highlight. And then if you scroll down even further, current portion of long-term debt, nothing there. And then long-term debt also seems to be nothing there. But we do have some other non-current liabilities, which I would like to highlight here. We can just plot that and other current liabilities, or basically their total liabilities. If we wanted to, we can plot their total liabilities, and even that is less than their total cash that's on the balance sheet. So that, again, is a very, very good balance sheet, because the company's got more cash. In fact, 4.7 billion of 1.3, that's like almost 4 times more cash on the balance sheet than all their liabilities combined. And you can see the quarter over quarter consistent increase on that number, while liabilities have relatively kept the same. So you can see they've increased, but not at the same rate as cash. So coming back over to analyst estimates now, we've got a buy rating on the stock with 14 buy ratings, 10 holds, and 1 sell. Low target of 174, average target of 225, and a high target of 273, which obviously does represent pretty decent upside. And if you come over to the growth aspect, right, so what are analysts expecting for the long term for Viva Systems? I mean, take a look at this. Earnings expected to go from 321 to as much as $13, almost $14 by 2032. That's a 20% CAGR over a 9-year period or 8-year period. That's not very common. This is a growth stock. If analysts are expecting over 20% growth over an 8-year period, that is a very, very high growth rate. 95% in 2025, 47% in 2026, and of course tapering down to 34%, 28%, 25%, and eventually 20% is where they're going to stabilize on a compounded annual growth rate basis over the long term. So if you simply plot for 2031, that's a growth rate of 21%. 21% CAGR for 7 years for Viva Systems, and revenue also expected to go from 2.3 billion to well over 6.6 billion by 2032, and that's going to be almost a 14% CAGR for the company over an 8-year period. So if we're looking at 7-year analysis, 21% growth rate, and if you come over to ratios, and let's take a look at what ratio it's exactly trading at. So if you come down here, on a forward basis, we're looking at 29, almost a 30 times price to earnings multiple, and price to sales on a forward basis trading at a little bit under 11. So what we can do is we can go to our analyzer, and we can go to our discounted earnings model. And if you hit autofill, last year's net income, 525 million. Let's plot for 7 years worth of analysis. And instead of 31%, which is the last 7 years of CAGR, and analysts are pricing in for 21%, we can go with 20% growth rate for the next 7 years for Viva Systems. And the expected P multiple, of course, the last 7 years traded over 87 on average. Right now trading at 29, close to 30 on a forward basis. So we're going to go with exactly that. Let's just go with 30 times P multiple, 12% discount rate, 10% margin of safety. 1.5% has been the share dilution. I'm going to go with a little bit lower, closer to 1%. If you hit calculate, we are looking at only 27% undervaluation. This is after a 10% margin of safety, right? So if I remove for margin of safety altogether, because the company's got so much cash than liabilities, that I think we can be a little bit more, aggressive here or optimistic here. We're only looking for a 19 to 20% downside with an intrinsic value sitting at 147.50. If you want to go with that 10%, then the fair value ends up at around 132. So 132 to 147 would be some of those levels to keep in mind for Viva Systems. And this is the entire sensitivity grid, which you can take a look at and figure out, okay, based on the growth rates, based on the P multiples, where would my fair value be for this stock? So 132 to 147 is some levels to keep in mind, and this is exactly where the technical support also is. Right now, of course, 183. 153 is going to be a very, very strong area of support to watch for Viva Systems. And again, this right here is going to be that level, kind of aligned with that pre-pandemic support that, of course, sold off and then rallied quite aggressively. After the pandemic, it rallied over 194, close to 200%. But that right there, 153 down to 137, two very important areas of support, and would be a very nice area of demand for the stock right about here. So I'm going to mark that in green. Very strong area of demand inside this green rectangle. And based on our calculations, the future price target comes out at $326 per share. So $326 based on where it is right now, $183. That's going to be a potential upside for the company, about 77%, pretty much trading back up to all-time highs over here. That's going to be that resistance to keep in mind for Viva Systems. So hope you all enjoyed this video and a complete update on the market. So future price target, $326. Intrinsic value sitting roughly at 132. Actually, 132 to 326 is going to be about a 100% increase because 145% estimated total return, of course, if 132 gets hit, because then we'd be calculating from 132. So this right here would be the fair value, all the way up to $326 would be that 140% potential upside. But of course, from right now, from these levels, that would only mean about a 75-77% upside. But 326 would be that price target for Viva Systems. Hope you all enjoyed this video, found it helpful. Let me know your thoughts down in the comment section below. And again, if you want to get access to this entire platform, do your own analysis, do your own research, figure out a lot of different fundamentals for individual companies and stocks and whatnot, visualize the data. Link's going to be down below. We're running a huge discount, 51% off right now for a limited time. We need your feedback, so let me know if you have any questions. As always, happy investing. I'll see you all in the next video.